these little details of like how to engage with your customers, how to get them through the onboarding flow, all these things are super critical, and that's where how people react to it, because a lot of times the experiment doesn't work. Like your variant underperforms control. You've inherently got to be anti-government. Like you've got to be a libertarian anti-government type, and you've got to be a quasi-gold bug. When I realized my textbooks, my professors, and everyone on TV were all wrong, I knew that the system had fundamentally broken. Bitcoin, this is like the perfect iteration of having a fixed monetary, like a fixed money supply. It's like a mathematical construct of like, everyone's like, oh, well, what's the appropriate rate of inflation? And Satoshi's like 0. Bitcoin's core, like, why is Bitcoin valuable? It has a monetary policy that can't be changed. It's almost impossible to seize, and you can send it to anyone you want. That's why it's valuable. And so when people want to buy Pringles with it, it doesn't touch any of those value props of like why Bitcoin is valuable. So, we're solving the problem of money, not fucking buying Pringles on PayPal. Like, who cares?
Hey everyone, thanks for watching this episode. If you enjoyed this episode, make sure you like and comment below. And to find future episodes in your feed and push notifications, make sure you subscribe. And if you click the little bell, you'll get every new episode as it's released. Thanks again for watching. Today, I'm sitting down with Dan Held. Dan Held is currently the Director of Growth Marketing at Kraken. His former company, Interchange, is a portfolio reconciliation tool for crypto institutional traders, and it was acquired by Kraken in July of 2019. Prior to that, Dan was at Uber on rider growth and global data. And before Uber, Dan had built some of the most popular early crypto products, including ChangeTip, acquired by Airbnb, and Zero Block, acquired by Blockchain.com, in the second ever all Bitcoin acquisition. Dan was part of the original 2013 crypto meetup group in San Francisco, which was comprised with the founders of Kraken, Coinbase, Litecoin, and others. In today's interview, we discuss Dan's background in growth hacking and what he does at Kraken, as well as Bitcoin's price action over the past 2 years, and much, much more. So with that said, let's dive in with the one and only Dan Held. Hey guys, I'm going to take a quick pause to introduce the first sponsor on the Jay Gould Show. I am happy and proud to say that this show is now sponsored by Withum Smith & Brown, which is a forward-thinking, technology-driven advisory and accounting firm that is committed to helping big and small companies be more profitable, efficient, and productive in today's complex business environment. Withum now also has a dedicated crypto and blockchain technology team to help early-stage businesses properly navigate all the crypto tax-related matters. I've been using Withum both personally and professionally for nearly a decade for all of my business's personal needs as well. I'm very happy with them, and I highly recommend Withum. You can contact Withum by visiting their website at withum.com. Now back to the show. Dan, welcome to the show.
Thanks for having me.
So as we were just saying before we jumped on, I have a huge miss in my portfolio as an angel investor. In December of 2013, I was introduced to Kraken for an investment. Somebody passed it over to me and I passed. At the time, it was like a $15 million valuation. Today, I think it's like 4 to 5 billion or something like that. Big miss. I didn't understand it. And I think people do this today with the underlying asset every day, right? They think, oh, I don't get it, or I'm too busy, or I'm too wealthy. What do I care? I mean, what a mistake. Number one, egg in my face.
Yeah, look, there's a lot of misses in life, right? We should have joined this startup, should have made that investment, should have dated XYZ person. You just have to look forward and make the best decisions that you can. Kraken, Kraken's been one of the, I remember from the 2013 and 2017 era, it had a huge amount of growth. And then Kraken's been Kraken's now worth, double digit billions. So, and of course that's like a secondary market sort of thing to where it's a private company, so it's not publicly traded. So
a piece of it sold for these prices, right? Yeah.
Yeah. Valuations are all over the place, but I think Kraken's one of the most valuable exchanges out there. It's been around for 10 years, is one of the most liquid venues out there. If you look at like depth of order book volume, and we've never been hacked. So Kraken's one of those kind of long-standing exchanges where I've in the 10 years I've been in this space, you learn that it's a marathon, not a sprint. And so Kraken certainly run the marathon, and we may not move necessarily as fast as some of our competitors, but we build stable core products that last.
It's funny. Like back then, the one of the things that threw me off is the tagline was "It's Forex for Bitcoin, Ripple." Believe it or not, was in the title, and other digital assets. And I I didn't know what any of that shit was at the time. I was just focused on ad tech. And it was also called Payword. Then they were changing the name to Kraken or something. It was going through a transition period on the branding or something like that. So there's a lot of things I just didn't get it back then. But yeah.
Yeah, that's a great question. The Payword being like the entity and Kraken being the like doing business as. I think that must have been like an old legacy sort of like corporate structure. Internally we refer to the company as Kraken. So I think back in the day, maybe that's just due to like, I'm not sure. Sometimes, with startups, you start to build it out and there's some old legacy infra in terms of like entities set up and it's too hard to switch them out. So, I
Yeah,
think
I'm actually invested in a marketplace business outside of crypto. It's totally different. It's called Rumby, and the corporate name is Carbon IQ. So like on your docs and everything, it's Carbon IQ, and the safe agreements that now got converted into an equity round, so they're converted to shares. But like, yeah, I think like he did maybe in the beginning it's a placeholder name of some sort, and then they came up with the branding through the process in the very very early days.
Yeah, and I'm just assuming, because I wasn't there back then and I don't know what his motivations were, Jesse that I'm talking about here, but I've done startups before and that's usually how it is you set up an entity and the easiest way is just to keep that going and you can switch out you're doing business as quite easily.
Yeah, that's an easy filing. Yeah.
Yeah, I do know that Jesse owned Kraken.com, I believe. So I actually owned that domain because he has a whole bunch of different domains
Early days.
and that was one of them. And so I think that's how the Kraken brand came about.
That's funny. Yeah. So he was a domainer. That's so funny. So he's like, we should use this. It's a good name.
It's a fun name. It's I think there's a lot we could lean into there. Kraken being the protector of the seas, of all the whales, minnows, and sharks. But on the branding side, we haven't leaned too much into that. But I find that personally kind of fun, where I think Kraken could very much play into liquidity or trading and that sort of. We also have a cute little logo, right? Like we're not like kind of a boring
fintech, right?
brand.
Yeah.
We're not a big boring fintech. The PayPal blue, the Facebook blue, Twitter blue. They're all the same blues. Kraken's this fun kind of purple, and it's got a little squid as its logo. There's a lot we can do with that. So I'm excited to see what we do later this year, where I think we will start to lean into a little bit more of the fun and kind of more approachable side of the crypto space. I think like a lot of the companies come off just kind of very austere and just very trading focused. And for the whole wave of newbies and retail coming in, you need that friendlier face. So I think you'll see a little bit of that later this year.
From the consumer side. Yeah. One of the things that also threw me off that year when I was evaluating and I was looking at it very briefly, and I was dismissive of it because I was doing what I was doing and just focused on, I guess, closed-minded, I should say. Right. And, was the volatility, and it was crazier back then. But I remember that year, if I'm not mistaken, Bitcoin went from like 200 and something down to like 50 or something dollars. And then it just shot up and down so much. It was crazy. And I think it was like, was that the year of the Mt. Gox? Like I'm trying to remember what happened.
Yeah.
Because there was some craziness that happened that year. I don't remember it vividly, but like, I just remember being really scared out of the asset, being like, wow, this thing is highly volatile,
I mean, from the start of 2013 to the end of 2013, it 100x'd. So
yeah,
it started at $10 and in March 2013, it went from 10 to 260 back down to 100. And then it had this sideways chop for about 7-8 months. And then later in 2013, it went from 100 to 1200. But yeah, from the beginning of the year to the end of the year, that was 100x. That's a lot of volatility. So
yeah, and the funny thing is, there was a customer that was trying to pay us in Bitcoin that year, and he kept asking me every single month, "Will you accept Bitcoin? You accept Bitcoin?" And I kept looking at whatever the exchange was at the time, and I'm watching the volatility in the day, the intraday volatility, and I was like, "There's no way I'll lose all my profit by the time I liquidate these things. Like, this is crazy. Just send me the wire, please." But obviously, it was wrong.
Yeah, it's definitely an issue in the earlier days. If you look at the chart of Bitcoin volatility over time, we've seen that drop. But
yeah.
What's funny is I think the volumes at that time too weren't super high. Like I think we're talking tens of millions a day.
That's right.
So volumes, today we're talking about tens of billions. So
the depth is crazy now.
Yeah, if you wanted to move a sizable chunk of coin, you were going to move the market quite a bit. And also Mt. Gox was the primary venue. So Mt. Gox was the primary trading venue until early 14 when they shut down, but they were still like 80% of volume up until.
I probably would have lost everything if I had accepted it. I always say that. It's like we would have accepted it. We would have left it on there because we wouldn't have known anything about cold storage probably. And we probably would have just lost everything anyway. So I'm like, I should have accepted his payments and kept the profit in Bitcoin. It's like, no, you probably would have lost it anyway. So.
And we're also lucky too that Coinbase, for example, Coinbase wasn't an exchange. It was a brokerage. Yeah. And they sourced liquidity not from Mt. Gox, but from Bitstamp. But if they had chosen Mt. Gox, the whole ecosystem could have been in a much different place.
Interesting. Yeah.
So like luckily, if you had held coins there, or Kraken started up later 13, or at Bitstamp, you would have been okay. But yeah, people forget how many exchange hacks, like
Hmm.
Bitfinex got hacked, Poloniex got hacked. These the early exchange infrastructure is very shaky. Like a lot of people look at it and they think it was kind of like, oh well, I totally would have survived then, or I wouldn't have left my coins on an exchange. Well, I mean,
You
it was
probably would
tough.
have.
There weren't very many I don't even think Trezors and Ledgers even
Yeah.
existed back then.
Yeah. Yeah.
And then BIP39, which is the 12 to 24 word backup, that didn't exist till 2014. So, it wasn't very easy to use, and there wasn't a lot of good software and tools out there,
Yep.
or interfaces that made it intuitive. And yeah, I mean, like it was like a third of all exchanges at the time were either scams or got hacked. Like
Yeah.
it was a super high
Which,
percentage.
by the way, wasn't nobody was aware of that at the time that they were going to be scams, but they turned out to be. To your point, and so like
Well,
if anybody has regret to like somebody like me, right? Like if you haven't, you likely wouldn't have had it anyway in the end because you would have just been scammed or something, in the earlier days. Most likely, for depending on the average person.
well, not your keys, not your coins was even more
That's
important
right.
back then. So yeah, I mean,
Yeah.
that mantra came out from that era, and that's why I didn't leave my coins on an exchange.
Yeah.
So yeah, I mean, the people who survived were the ones who took the core ethos of Bitcoin and leaned into that. So, but yeah, I mean, you have like Cryptsy as well. Cryptsy was huge. I mean, Cryptsy was one of the biggest exchanges out there, and the guy just ran off with all the money, which is nuts, and no one's heard from him since, and that was like 8 years ago.
Incredible. Yeah.
But yeah, the early crypto space was fraught with scams
Mhm.
and bad infrastructure. But yeah,
It's like that when everything that starts out, though. I mean, it's
yeah,
always the case in the very beginning of new industries and stuff, particularly on the internet and stuff. Like most things are gambling or pornography or something like that for video, right? In the early days, and those by the way, the porn industry is usually the first one to adopt early technologies. But
yeah.
anyway,
There's
I
also
digress. I want to get into your background,
yeah,
actually, Dan, because you're an OG, man. You've been around this a long time. So anyway, you sold your company to the reason why you're at Kraken is you sold Interchange to Kraken. So can you tell us what you did in that company, what they did with the asset, and what you're doing now at Kraken for us?
sure. So Interchange was a post-trade reconciliation tool for institutional traders. Now, what does that mean in plain English? It means all these institutional traders, aka crypto hedge funds, are trading back and forth between all these different positions, and they need to liquidate those positions or move those positions around and track all that cost basis and taxes that they owe. So we would help reconcile all their on-chain and off-chain exchange activity, pull it all together, reconcile it, and then their fund administrator, which is like their fund accountant, uses our tool to talk to them and look at all their data. So like we're kind of a tool that's in between their accountant and the hedge fund. And so we got bought by Kraken in July 2019, and Kraken brought that tool on board and ran it for a while. But over time, we've deprecated that tool. But we've used it to go build out some of our own internal infrastructure. So it's not used external facing anymore; it's more just internal facing.
Mhm.
Um, I think what's really interesting about my development at Kraken is that I started out in the business development team. So my background's in growth product and growth marketing, but on the BD side, I stepped into that role because that's the role I had at my startup. My startup didn't need a growth person because we were 6 people.
Yeah, yeah.
So I was brought on board at Kraken for business development. About 6 months in, I cold pitched Jeremy and Jesse the idea of the growth marketing, product marketing orgs and built those out from scratch. So I've been pretty proud over the last 2 years to see the whole team develop and us build out a proper marketing org. A lot of crypto companies, not just Kraken, didn't really prioritize marketing for a long time because of
Mhm.
the huge organic upswell in the markets, right? You've got, when the markets get hot, you've got all these people coming in organically. And so that used to work back in the 2013 and 2017 cycles. But I think now with all the competitiveness in the space, you definitely need a really robust, proper marketing org. So I'm pretty excited to see how far we've developed, and the team's huge now compared to what it used to be.
Can you tell us, like, share a little bit of what you're doing in the
Sure.
marketing? Like, what is your plan? Like, what are the pillars of your marketing
Yeah.
plan?
So there's a classic term called the marketing funnel. So at the top of the funnel, you've got awareness, consideration, acquisition, and activation. And there's a couple more steps there, but that's generally the marketing org. And so when we look at the function of a marketing team, it's to raise the awareness of a company. And through doing that, then eventually you get those individuals to come consider the company and then sign up for the product or service. So My role, because I have a sub team on the marketing org, is growth marketing. So we take people from or users, potential users from the awareness level, so awareness or consideration, and we take them from the consideration to the acquisition stage. So what does that mean? My team focuses on getting people who are aware of the Kraken brand and get them to sign up for Kraken. So we do that from SEO, like through SEO, organic social. So if you see a tweet, that comes from my team. Paid acquisition. So if you see a Kraken ad, that comes from my org. You've also got conversion rate optimization or app store optimization. So if you go to Kraken's app store pages or you go on kraken.com, my team configures like the homepage, for example. So we configure that for maximum conversion, the view to a click rate. So users land on that page, or potential new users land on that page. They see different copy and graphics that compel them to want to go sign up for Kraken. So yeah, even if there's a huge upswelling in organic, so like without us touching some of those levers to pull in new users, you still need to optimize the journey that they go through. So a growth marketer, the easiest way to think about it is that we remove friction from the prospective user's journey from the awareness level to acquisition. And so what do I mean by that? We make it easily understood what we do. We make it easy to sign up. All of those different touch points.
Removing the friction. Yeah,
exactly.
Interesting. So you're really integrated with the product team for your growth strategies.
A little bit, yeah. So I mean, post sign up, we hand it off to the PMM org, product marketing, and the product org. So I've worked on that side before. Back when I used to work at Uber, I used to work on growth product. So I've been on that side as well, which is more onboarding. So getting them to the sign up form and then getting them through the sign up form and into the product and post KYC AML, post funded account, and then get them to go trade for the first time. So that's more like activation, like getting them activated. So just because they signed up doesn't mean they're like a customer that understands Kraken's value yet or is generating revenue. And so it's sort of like a relay race. We hand off the user to that other team, the PMM and product orgs.
So yeah, I have this on my list. So you were at Uber, you were rider growth, and then it said global data. Maybe I got this off of your website. What exactly did you do there?
Yeah, so on rider growth, the team was led by Andrew Chen. He's a GP at Andreessen Horowitz now, but Andrew's a really well-known growth guy in San Francisco. And so I was one of the team leads working on App Store optimization. But the team consisted of App Store optimization, onboarding, engagement, and virality. So onboarding is a sign-up form. Engagement is long-term engagement and retention, and then virality was getting Uber users to share the product with their friends. So you give out a free Uber ride to your friend, you get a free Uber ride. App Store optimization is optimizing every aspect of the App Store for search optimization and conversion rate optimization. So it was a blast working on that team, and it's actually a quasi growth marketing / growth product function. So got a really cool exposure to growth product thinking at companies like Uber, which Uber had one of the best growth teams in existence.
I mean, Jesus, it's one of the fastest growing companies ever, right?
Totally. And they can all kind of map their ancestry through this DNA of like growth teams. So Uber's growth team came from Facebook. And Facebook's growth team was the most legendary growth team in existence. So it had this pedigree and DNA that prioritized different ways of thinking that I think was like really, really valuable for my long-term career trajectory and just like building out that growth mindset. And also seeing how people move through blockers. Growth people look at blockers or things that will stop a project from getting done, and you figure out any way to go get it done. And you figure out how to get the best win. Win is like, let's say we want to redo the onboarding form. And so the onboarding form currently has 16 form fields: first name, middle name, last name, a bunch of other information, right? Well, how many of those could we eliminate? We could probably eliminate the middle name, right? And so you go through and you slice all that out. And then it's like, oh, well, we can't launch the new form because there's this blocker. And you're like, okay, what's the minimum amount of stuff we need to go ship this in product? And same on growth marketing. It's like, what's the minimum do we need to go ship this or learn from this? And so it was really interesting to see how we moved around those blockers and how we built out different things. So we tried all sorts of different experiments, which I think that experimentation mindset was kind of critical to my current experimentation foundation of like, how do you go run an experiment? How do you go test against control? So you've got a new variant, which is like a new onboarding flow versus the existing one. We tested everything at Uber, and that we ran over 120 experiments, which is really cool because you're testing on hundreds of millions of people about like, okay, if I make the sign up form, all of the form fields on one page, or you break them up into each on their own,
right?
Or what if you show them the map first versus like showing the map of like all the Uber cars? And then if you tap on that, then it opens up the form field. So we experimented with all that stuff. So that was super fascinating. And I think very formative to who I am in terms of my profession. That was a lot of fun though. I think like a lot of people don't have a growth mindset
Yep.
and most people don't think about it. What's funny is like when you look at critical mistakes made by early stage companies, they're typically bad growth mistakes. Like here's a good one. And I've got friends who work at this company, so sorry if you guys listen to this, but Clubhouse.
Oh God.
So Clubhouse is a great product, and before Twitter Spaces, it was very, very popular during COVID.
Mm-hmm.
Now the problem was that every conversation is live. So when you want to pull people back into the product, it's only if there's a live conversation going on that they care about. Well, how do you get someone to open up the app when they don't know that the conversation is going on?
Right.
Well, you could send them an email. They could organically already be in the app, which Twitter has that to its benefit. People are already scrolling Twitter and then they see a Spaces, right? So the discovery problem here is what I'm talking about.
Mm-hmm.
Or they can send a push notification.
Yeah. And then you get inundated.
Clubhouse sent a fuck ton of push notifications,
and
right?
people started closing them out. Yeah.
Yeah. And then people turned off the push notifications, which closes that engagement loop for forever. You can't pull them back into the product.
They screwed it up. Yeah.
Now, how do you think they made that decision? Well, let's put it this way. I'm not going to go into the details of it, but it was made in a very cavalier manner by one individual.
Oh, they didn't use data.
Yeah. These are the sort of devastating decisions that you can make if you don't have a growth mindset of like, okay, cool. Well, how else are we going to get them into the product? There is no other way. So if they turn off push, you'll never be able to communicate with them again.
And you can't try to remarket to them to get them to come back because they're like, I already did that,
Exactly.
Mm-hmm.
So, these little details of like how to engage with your customers, how to get them through the onboarding flow, all these things are super critical. And that's where I think it's particularly fascinating to run these experiments and see how people react to it, because a lot of times the experiment doesn't work. Like your variant underperforms control, which I think is particularly fascinating because it's like, okay, you come in with humility of going, I don't know it all. Mm-hmm. I hypothesize that if we did this, this will happen. And then you go test it. And, a lot of the time it doesn't, your variant or what you hypothesize was going to do well, doesn't do well. And that's why you test. But yeah, that was a blast there at Uber. Worked with exceptional people. I mean, Uber was a super hot company in 2016 to 2017. So met a ton of great people, built out a really good foundation for who I am in my growth profession. Mm-hmm. And then, and we also worked in the global data team. So we focused on piping in global data to kind of inform the external landscape. So for example, like you could pipe in weather data and then that could build out a better supply demand modeling, which is kind of cool, or event data and stuff like that, like different events were starting or stopping.
Sure.
So pulling in different external APIs to color in that landscape around us.
As you're saying this, like, because I've been in the internet space for like 20 years. So like, I remember MySpace was really good at this stuff actually. People don't realize that, but they, when you were talking about the form and the sign up, the one thing that they did, cause we were competing with them at the time, it was like type in your email address, hit enter, and then bang, they sent you an email and they got you, right? And then you're in, and then they try to get you to go through the steps later, right? It's like, just get in first. Reid Hoffman was an investor in one of my companies previously, and he was like, I think he called like keystroke ratios or something like that. And it was all about this kind of stuff. He introduced me to this guy, Max Levchin. He was running slide.com at the time. And everything was growth hacking. Everything was A/B testing. They tested colors of logos and they did the font colors and the sizing, and like everything was tracked on those pages. There was no accidents. Everything starts with intuition, and then the data determines what they do. And then they would do two cohorts, right, throughout the country. Like you'd see something different than I would see, and all this kind of stuff. And they looked at our demographics, and I'm a male between the ages of this and this in this part of the country. And then eventually it comes to, by the way, Facebook was probably, like you said earlier, was probably the best at doing this. I mean, friends of mine be like, oh, would you see this new feature on Facebook? And I'd hit refresh a few times. I'm like, nah, you're seeing a different page to me. And they're not from the internet industry. So they were like, how is that possible? I'm like, because you're bucketed for whatever reason. They're testing something with you right now. That's what's happening. And you might not see it in an hour.
Yeah. And I mean, experimentation and bucketing is like a very intricate, very, very tough process to dig into. And a lot of people will go run an A/B test, but they run it poorly. And so the results are tainted, right? So like sanitization for A/B testing is also very critical, where people claim that they do A/B testing, but they don't run sanitary environments, or they'll run it for a very short duration. It validates their hypothesis, and then they go, oh, well, this is a win. Well, for example, like at Uber, we have a huge sample size.
Yeah.
Right. So something that we refer to when you're running experiments is called stat-sig, statistically significant. And what does that mean? That means that based on the amount of variance that we're trying to measure, did we have enough users flow through to give us an accurate read where we're very confident that our experiment results are likely to be that? So, for example, people usually run experiments with 95% confidence intervals, where we're 95% confident that the expected result lied between these 2 points or was between these 2 points, and we had enough users to give us 95% confidence. 100,000 people went through it, so we're 95% confident that this does well. So for example, with Uber, at a minimum, you'd have to run an experiment at least a week. Well, why a week? Is that just an arbitrary amount of time? No, because the user intent changed on weekdays versus weekends.
Interesting. That's a different dynamic. Yeah.
Exactly. Those types of users who are signing up on the weekend are typically more oriented around drinking.
Yeah. Going out to the bar.
Yeah, if you had a different sign-up form or different marketing collateral, that collateral could impact people who are drinking and wanting to sign up versus other people who are sober and wanting to sign up.
Yeah.
And so that dynamic meant that you had to run an experiment for at least a week to measure both types of customers who were coming through. So, little things like that, a lot of people don't consider that, or they don't run. They like lower their confidence interval to like 80%. Well, now we're only 80% confident.
Yeah.
So there's all sorts of nuances here too. And also, experimentation is a great way to do rolling out a new feature, because there could be bugs, right? So running things out as an experiment are great, because if all of a sudden bugs start spiking or reports, of the app crashing start to spike.
That's also definitely true right there. Yeah. When you're pushing a build. Yeah.
Push a new build, all of a sudden crashes start spiking. It's a good way to, if you do a slow rollout, it's much easier to roll that back versus, you just roll them out to everyone.
Yeah. I think Facebook did a lot of that, right? If they pushed a new product feature, the developer was allowed to, the team or whatever was allowed to push it through, and then they tested it in certain markets. And then if it works, it passes levels and it keeps going to more and more users. Eventually it can go live.
Yeah, you can kind of think about it like it keeps spiraling out until more and more users are bucketed into that experiment or that rollout.
Yeah. And if it doesn't crash and cause problems, it keeps moving, essentially. Yeah.
Exactly.
I got to tell you, I love talking about this stuff. We should dump into more Bitcoin stuff. I'm sure people want to hear that. I could do this stuff all day. I love this stuff. It is the most underappreciated thing, I think, from a lot of early founders that they don't understand this stuff yet. First time founders, but anyway, I digress. Before we jump into that, I wanted you had two other companies previously, ChangeTip and Zero Block. Man, you've been doing this a long time. So this is what, 2012 or 13? When did you do those companies? That's
2013 for Zero Block. So Zero Block was the most popular mobile app in crypto in 2013, and we got bought by blockchain.com. I came on board there as the first product manager. Now, what's interesting is my growth hacking or like my growth marketing skills were actually created building Zero Block.
Okay.
I didn't know what I was doing building Zero Block. I had never built a product before. I had no PMing experience. I had no growth marketing experience. I had obsession. And that's all you need to be good.
That's it.
But you apply that obsession, and then you learn the basics and you learn proper growth marketing, product marketing. So with Zero Block, like we had no sign up form because we dumped them right into the product and showed them what was valuable. People were like, great, I immediately understand why I should have this app on my phone. And then in terms of like growth marketing, so that was like stumbling upon that by accident, that simplicity. And removing friction, removing all friction, there's no sign up form, is the ultimate way to get people into the product and show them why it's valuable. On the growth marketing front, we ranked number 2 for the keyword Bitcoin in the App Store because I figured out how the App Store ranking algorithm worked. So that was just through some trial and error and Googling around how people did it. And so that kind of kickstarted my fascination with the growth mindset and growth products and growth marketing. So yeah, we sold that to blockchain.com. I was there for a year as a PM. Did
you raise capital for that company, or was that a bootstrap?
Blockchain.com. We raised money later 2014.
No, I mean Zero Block. I'm saying before you sold.
Oh no, we didn't raise any money for Zero Block.
So that was good. Oh, that's good. Okay, cool.
Yeah. So that was pretty cool.
What about the company? What about Interchange? Did you raise capital for that, or was that also bootstrap?
Yeah, we did a seed round plus a bridge. So
it was not over capitalized. That's good. Okay.
Yeah, that's right. And then ChangeTip was micropayments on social media. So tipping on Twitter using Bitcoin back in the 2015 era. Yeah, I
a little bit ahead of the game on that one.
Yeah, a little too early. I didn't start that company. I worked for a guy named Nick Sullivan, who was one of the co-founders. So Nick is still around the space. He has a hedge fund called Rhythm.
Okay.
So yeah, he's been around for a long time. but yeah, it's the micropayments over social media. That was always a fascination for me, and certainly would be really cool to work on that again someday at Twitter or something. If Elon Musk took over, I could see Elon being more open to the idea than the existing Twitterati. But yeah, it's been a long journey of just, I've touched on basically everything. And blockchain.com is a block explorer, non-custodial wallet. You've got Zero Block as a price tracker. You got Change Tip, micropayments over social media, Kraken, exchange, brokerage. So I've kind of touched on it all over the years.
It's incredible. And then not only that, you were in the meetup group in San Francisco in the early days with the founders of Kraken, Coinbase, Litecoin, and others. It's like, you've been around.
I'm like the only non-billionaire in the group. So yeah, I feel a little poor, but yeah.
You did something wrong. Like me, you screwed some things up. It's okay.
Yeah.
We did all right though, right?
Yeah, startup. I'm doing okay.
Exactly.
Startups are hard, as you know. It's tough to pick the right ones, as you mentioned.
It's also about timing, right? Like timing is everything in startups. I tell these people all the time. It's like the time that you get out of that is as important as the time you get into it, and you can make the wrong decisions by selling too early or taking liquidity too early or whatever. But overcapitalizing companies, as I was asking about that. Sometimes you overcapitalize. There's an exit. It's a down round. People don't realize it could be a soft landing. Like there's all kinds of funkiness in startup.
Yeah, there is one mistake I didn't do, which is good. And a lot of early Bitcoiners did this. Almost all of them did. They sold all their Bitcoin to keep their startup alive.
Oh, yeah. I hear a lot of that.
A lot of them did that. I feel bad for them too, because they cared the most about Bitcoin because they wanted to go build tools and products, right? To go service Bitcoin customers.
It's like they didn't really understand Bitcoin.
A little bit.
They thought it was the picks and shovels. It was more important,
Yeah, back in that day, a lot of people really didn't get Bitcoin. They were just kind of like, they were either gamblers who got into it because Bitcoin was like a new rail for gambling stuff, or they liked the payments narrative, or they just hopped on the bandwagon. Like not many people were like, had a super strong conviction.
That reminds me, like, what do you think of Max Kaiser? Like Max was in this so early. How did he understand it that early? And I always scratch my head on that one. I'm like, how the hell did that guy get this that early, that this was a store value asset? Like, I just don't get that.
You've inherently got to be anti-government. Like you've got to be a libertarian, anti-government type, and you've got to be a quasi gold bug. And so, I was, before I saw Bitcoin, and I was studying in the 2008 financial crisis, I was studying finance in undergrad. And so, when I realized my textbooks, my professors, and everyone on TV were all wrong, I knew that the system had fundamentally broken. And so over time, started to learn more, read Zero Hedge, so to better understand how the financial infrastructure worked, got into gold, and then heard about Bitcoin. And I'm like, oh, well, Bitcoin, this is like the perfect iteration of, having a fixed money supply is a genius monetary policy breakthrough because, you can't go change the rate of inflation constantly. And it's like it's like a mathematical construct of like, everyone's like, oh, well, what's the appropriate rate of inflation? And Satoshi's like 0, and that's like a pretty brilliant breakthrough because it reduces your political attack vector of people wanting to change the protocol to create an appropriate rate of inflation. And then also choosing an appropriate rate of inflation is impossible. So the only appropriate rate is 0. And then the economy reorients around that, which I think is brilliant. So that to me came out as like a very good monetary policy breakthrough, and it was far superior than gold. Of course, Bitcoin's testament as its immutable properties, Silk Road and other things were testament to that. So I was like, wow, this is incredible. If people can go buy things that are illegal, then this is a really robust new type of money. Mm-hmm. And so I think those types, you have to be very anti-government, kind of libertarian, to really grok wow, this is going to be big. You also had to be kind of pissed off about the banks. You had to be kind of who gives a shit? I don't give a shit if Bitcoin disrupts Visa. Who gives a fuck? Fucking Visa, PayPal, who gives it? It's meaningless.
But it does start with understanding the monetary policy issues first, and then going to the next steps. So for me, that was going over my head. I was a part of the system and someone benefiting from it, in the early, throughout the early to mid 2000s. I didn't see a problem. I was like, oh, all you have to do is this, and this, and you can get wealthy. And I was getting as close as I could to the cotillion effect, to the money, as with the VCs and everything. And it was over my head, I
mean, we're solving the problem of money, not fucking buying Pringles on PayPal. Who cares? Right. And so the early Bitcoiners who championed that totally missed the mark on why it was valuable. And I'm like, yeah, payments for illegal things are great because it's, Bitcoin's immutable, right? Bitcoin's core why is Bitcoin valuable? It has a monetary policy that can't be changed. It's almost impossible to seize, and you can send it to anyone you want. That's why it's valuable. And so when people were like, I want to buy Pringles with it, it doesn't touch any of those value props of like why Bitcoin is valuable. So I never really got that. I never really understood. I mean, all the companies that were VC funded at the time, though, like that was the narrative because like VCs didn't get it either.
Yeah,
VCs didn't want to fund things that were going to disrupt the government. They wanted to fund things that were going to disrupt PayPal. It's a much easier narrative to grok. But I was very, very fortunate, that I didn't plow a lot of I didn't sell all my Bitcoin to go fund a startup. Also happy I didn't go spend it on stupid hamburgers or Pringles or something. I mean, a ton of people did that. They were like, this is how we build Bitcoin. And I'm like, I disagree. I'm a product guy. And why would a customer want to spend their Bitcoin? They're like, because. And I'm like, no, you're just projecting your own hopes on them rather than.
Yeah. Andreas Antonopoulos was on Clubhouse last year. You talk about Clubhouse, right? Or maybe 2 years ago. I don't know. Whenever he was on. And he was saying how even now he's selling his Bitcoin to fund the operation of the business that he has. And he pays people in Bitcoin all the time. And I'm like, I was like, this is terrible to say this on a stage. At that time, Clubhouse was popular. As you said, there was a couple thousand people in the room. And I'm like, don't tell people this shit. What are you doing? This is a store of value. Guys, don't listen to him. And everyone's like, don't tell him. Jay, do you know who Andreas Antonopoulos is? You can't say that to him. And I was respect him. And I was like, dude, no, I'm sorry. I don't know who you are because I didn't know him yet. I wasn't like a Bitcoin maxi. I was like, I don't know you. I know a lot of people have a lot of respect for you, but this is terrible advice. Do not encourage people to sell their Bitcoin. Please do not sell your Bitcoin. I was telling everybody.
Yeah. This narrative still persists till today, which I find bizarre. Post 2017 Bitcoin Cash hard fork, like you think that this narrative would be done, right? Yeah. But instead it's come back a little bit of like the circular economy narrative. Now, look, to be clear, you can do whatever the hell you want with your Bitcoin.
Of course.
Right? Regardless of our opinion here right now.
Just know what's going to happen.
Yeah. Just know again, from a product mindset, what problem is Bitcoin solving? It has a monetary policy that can't be changed. It can't be seized very easily. And you can send it to anyone you want, which means it's best suited for whatever you'd like. But typically, if you don't need something immutable, just use Visa, right? So, how does using Bitcoin in a circular economy improve, or like how do any of those three value props that Bitcoin has, how do any of those have to relate to a circular economy? Some people claim they're like, oh, well, it'll reduce selling pressure, right? And I just fundamentally disagree with that. Like, there's regular expenses, and even if like all your different vendors accepted Bitcoin as payment, like eventually one of them's going to sell, and like it just doesn't really make a lot of sense. The circular economy idea that this is like what's going to bootstrap Bitcoin into the global world, like this is what's going to make Bitcoin valuable. People want to store value in the asset, and there's reservation demand with that, right? As more and more people store value in the asset, the price goes higher, more people become aware of it. Then more and more people become part of the network effect because more people own it. People first have to own it before they want to transact with it. Yeah. And the whole medium of exchange people, circular economy people, skip over the ownership component and they go, oh, well, we'll just skip into this. We'll just convince everyone to accept Bitcoin. I'm like, no, you have to convince them that it's a real thing and it's a real money. And so that starts with store of value. People first have to store value in it before they would ever want to maybe transact with it at a later date. And so, eventually, and I don't think like Bitcoin eventually will be our medium of exchange and unit of account decades from now. It's going to be a long time. Like when 50 or 60% of the population owns Bitcoin.
Yeah.
Okay.
The volatility will smooth. Yep.
Yeah, volatility smooths. Maybe the dollar's, starting to really crash where people stop believing in fiat. Then merchants go, wait a second, I don't want to hold this fiat ever. So pay me in Bitcoin.
That'll be the fiat will be the volatile asset. Yeah.
Yeah, exactly. And so, and also there'll be enough people to where there's a network effect. Right now, if you post a, we accept Bitcoin here sign, you will get like one customer a month.
Yeah.
And look, I've been here before. Like we did this all in 2014, and it's crazy to see people do it again. And I saw it in 2017, and now it's in 2022, and people are trying the same thing again. Where I'm like, look, it's the same thing. Customers don't own Bitcoin. And they don't want to pay in Bitcoin. And the people who do own Bitcoin don't want to pay in Bitcoin. So it's not like a binary thing. Like it's not going to be like there's a switch that turns on, but it's going to be more like an S curve of adoption where more and more people use Bitcoin as a medium of exchange when they need to, because they have to. Like maybe that's the only way they can pay for something, right? And then there'll be the moment of like fiat starts to decline very rapidly. And then there'll be that S curve of like medium of exchange adoption where people go, okay, well, I don't even want to hold fiat ever. And so I'll just have all my assets in Bitcoin, or I'll like have all my expenses and revenues in Bitcoin. So yeah, I think it's more of like an S curve of adoption. So it's not like it's never going to happen. It's more of being early, as you know, in tech. Being early is the same as being wrong.
Yeah. I've done that a lot.
Yeah, the whole Bitcoin Cash community, like, they all forked off because they were that wrong. And it was contentious at the time, and is a large chunk of the community because so many people were misinformed about Bitcoin's basic value prop.
Yeah.
So yeah, I just don't want to see that happen again. And I see a lot of people championing that. And I'm like, well, you can do anything you want with your Bitcoin, and I encourage people to build new products and services. But at the same time, I really dislike seeing huge misallocations of capital and expectations where, if you convince someone to join Bitcoin because you're like, hey, look how easy it is for payments, and then they don't find that value from it, then they're not going to come check it out again. Like, you've permanently dissuaded them from not ever like checking out Bitcoin again. And so they're like, well, what's the harm? They can learn both. I'm like, no. As a marketer, if I go, hey, Uber is great to sleep in as an Airbnb, it's not useful for that at all.
No.
And so if you do that and you try to go sleep in
it's the wrong narrative. Yeah.
Yeah, it's a wrong narrative. And
Saylor's got a good narrative. He sticks to talking points, and when he goes on different podcasts as well as television and stuff, I feel like he's been really good for Bitcoin for the last year or so.
Yeah, what's cool about Bitcoin is there is no central marketing org. It's a decentralized marketing team of myself and you and Michael Saylor. And so whichever narratives are resonating with the mass population, we'll see our follower counts and our engagement grow. Mm-hmm. And whichever narratives are not resonating, they'll see their follower count stagnate or their engagement stagnate or decline. Yep. This isn't a bad or good thing. It's simply just a huge A/B test of narratives.
I will say, if you talk about price, you get a lot more followers. Look at Will Clemente.
Totally.
It's like price porn.
Yeah, there's some price porn. I do think, I've been around the space 10 years, it's a slippery slope there where I do look, obviously I'm super bullish on Bitcoin, so I would be remiss not to call out my own bias of always being bullish, because I am. I'm still hodling and I'm still very bullish.
Yeah.
I haven't seen anything material that would change my opinion on that. However, I'm typically not trying to call things like a month or two or a week from now or using on-chain analysis. And it's a slippery slope and really tricky there because you can build up a following, but as soon as you're wrong a couple times,
that's it. You've cost people money, basically.
Cost people money and yeah. Now people complain that I'm too bullish, but I'm like, I don't know. I don't see any reason why I shouldn't be bullish. This
leads me to the supercycle, right? Because you've been a proponent of the supercycle theory, and I want to talk about this for a second. Number one, for those that haven't heard of supercycle theory, I want you to explain it. Then number two, when do you think we may hit the supercycle? Do you think we may hit it soon, this year, next year? Because I've heard you talk about this like a year or so ago, and you were thinking we might be on our way to that. And I basically have your views changed on the super cycle happening anytime soon relative to what's been happening over the last year with the China ban and all this other stuff?
It's a great question. I actually came up with the super cycle in 2019, back with Anita Bosch on her podcast. Mm-hmm. So we were at Baltic Honey Badger in Latvia when we recorded it. So the original premise of the super cycle is what happens when there's a Bitcoin bull run that corresponds with a big macro event, like a recession. Or COVID. And that's what happened the year after. Because in that moment, on our day-to-day, in a bullish lifestyle, we don't ever question our reality. Everything's fine. Everything's dandy. Nothing. We don't have anything to worry about. COVID all of a sudden puts governments and their decision-making and the economy back into focus, where people go, wait a second, can I trust my government? Can I trust my central bank? Those moments don't happen very often. And Bitcoin had never had a moment like that since its inception. From 2009 on, things were pretty smooth-ish. And so my hypothesis was there could be a super cycle event where a Bitcoin bull run corresponds to the big macro event. Yeah. And so that's what we had. Now, kind of the more modern, kind of over the last 1 or 2 years, how we describe what happens in a super cycle then would be that the Bitcoin bull run wouldn't look the same as it did in all the other times because you didn't have this macro backdrop, right? So that's the core kind of background of the super cycle thesis. Now, how does that look in reality, or how does that look price action wise? So my hypothesis was we either have a more intense bull run, which we did not see yet, or maybe we see a double top where there's another corresponding bull run later this year or something like that, which if you look at the elongating cycle thesis, that each cycle is becoming longer and longer, then later this year it is truly what the top should be. Or you could have a more muted bear market, where you have a normal bull run and you see a more muted bear. I'd say we had a more muted bull run than what everyone expected to hit 100,000.
Was that mostly due to the China ban, you think? They kind of stalled things?
I don't think it's the China ban. I think there's, in previous cycles, Bitcoin had a stronger face of like you had to go buy Bitcoin first before you bought anything else. And now
Okay.
there's so many on ramps and off ramps where you can go buy an alt like much easier. And there's many more narratives like NFTs and everything else. Whereas before Bitcoin was like the primary speculative price action. Now there's a lot of different games, if you will.
Sure.
There's staking, there's lending, there's borrowing, there's all sorts of different tokens you can buy,
Yeah.
a lot of different narratives, NFTs. So I think that some of those do distract from Bitcoin a bit. But yeah, we saw kind of a more muted bull run and a more muted bear. If we're in a bear, we may not we may not, because this doesn't feel like a bear market to me. I've been through a couple, and people aren't despairing yet, and we haven't seen panic, and people still feel pretty bullish.
No, as it's going to the bottoms and people are telling me we've hit the bottom, I'm like, I don't feel like we've hit the bottom, because in the sense that that it hasn't, like, there's not capitulation in any way, right? Like, at least from what my belief. Um, Joe Carlos Arley, who's I met him on Clubhouse. He's an attorney, he's a Bitcoiner. He and I kind of spat back and forth over this a bunch. We're friends, so I kind of play with him a little bit on Twitter, with the tweets. But I'm like all time B, like ATB, all time bottom. I go, we didn't hit all time bottom, because everybody talks about ATA, and he's like, we're gonna have all time high by the end of the year, and I'm like, maybe. I was like, but I can tell you one thing, we definitely didn't hit the bottom, in my opinion, because when we get there, it's everybody's front running. I actually feel like they front ran 100,000 at 69 too. Like, everybody thought it would be 100 because the stock to flow analysis with Plan B, and then you get there, and so everybody's trying to sell it before it gets there, because like, well, maybe they'll start selling in the 80s and 90s, so they all front.
Right.
Everybody's front running. Everybody front runs everything nowadays, right?
Well, it's called a Keynesian beauty contest. It's a beauty contest not based on the true underlying beauty of someone. It's based on your subjective view of what someone else might rate them.
Yep.
So you're just betting. And it's a reflexive cycle.
Yeah.
Where you're constantly getting. That's how markets work. It's not about the core underlying asset. It's about our perception of how many people
Everything
will go.
else.
Yeah, exactly. So I think when we look at this, it's like, well, where's the bottom for Bitcoin? Well, it's not going to be zero, because I'll buy it at a penny. And
That's
then
right. Yeah,
someone else will buy it at 3 cents. Someone else will buy it at $3 and $10. However,
it just didn't feel like, oh my God, it might be over, right? Like, when you get that feeling like, holy shit, this might keep going lower, that's usually the bottom, right? Like, that's the time to actually lean in, when it's like when you're feeling the anxiety.
Yeah, and similarly, we didn't feel that elated, massive bull run feel either. It had a little bit of that.
Nope. It just turned very quickly and turned around. Yeah.
Yeah, we had a little bit of that, but it did not feel like a suspension of disbelief.
No, like in November, because we hit 64, when we got past 64, I go, oh yeah, we're going. We might go to 100. And then it just turned around at 69. And I was like, that's unexpected. What happened here?
Yeah. But that's not even like a bull run. Like, that's not like an elated, that's not the blow off top of a bull run. We're just
it didn't feel that way at all. No, it surprised me that it turned around. Actually, I was like, that's weird.
Yeah, I agree. And we all thought this was like, okay, this is going to be like 2013, 8 months of a sideways bear market. Then we go up. But it could be like, to the elongating cycle thesis, late 2022 technically is when the bull run should be, or the finality of the bull run. So maybe this is just the run up, the run up to 40K. And then maybe from here we go to 400,000 or a couple 100,000, right? But who knows? No one knows where these things are going to go. But I mean, Bitcoin's long-term value prop is still very clear, and it's very, very relevant in the time we are in today. So, that's why I'm bullish, like perma bullish on Bitcoin, because governments aren't going, hey, let's go reduce our budgets. Like they're not like, hey, let's go reduce our deficit. Hey, we want to instill trust back in our economy, so we're going to remove ourselves from the process. Like, they're not doing any of that. That would go solve this problem. That would make me more bearish on Bitcoin. No, I mean, Bitcoin's value prop has never been more clear.
Or well understood by people too. It's actually becoming well understood by even like Wall Street investors and stuff. Like, they're all getting it now. Like, I gotta say, like, a lot of people will say there's been a lot of criticism over the last year. But I see a lot of positivity, right? Like, if you look at the progress that we made from 2020 into 2021 all the way into now, institutional capital came in, Skybridge Capital, MicroStrategy, obviously, Michael Saylor, Tesla, PayPal. I mean, NYDIG is doing some great things. Yeah, Ray Dalio, like, oh yeah. I mean, Mass Mutual, like, there's a tremendous amount of adoption that you just, like, in 2013, it'd be laughable to say that these institutions would be doing these things.
It's a huge new shift. I would say Bitcoin is widely accepted as a Gould 2.0, and that is a massive narrative change. And
incredible.
Institutions have only dipped their toes in the water. What happens when, like, people, they really start to dip in?
Yeah.
So, like these things take time. They take years and years of different other funds dipping their toes in, which then gives the impetus for other funds to go, hey, look, they're doing that. We can go do that too.
Yes.
Stakeholder buy-in at these funds requires a lot of time. Working at big corporates, you understand that stakeholder buy-in and get projects done takes months or maybe even years. So
investment committees,
some of
et cetera.
the foundation's been laid for, for the Supercycle or a very, very big bull run or something, I would say like something interesting to happen in the next year or so because of all this foundational stuff that's been laid down.
How about the fact that the president of the United States of America, the sitting president, puts out an executive order to study Bitcoin across all these major agencies within the government? Nobody would have ever guessed that would have happened in 2022. I don't think, like 5 years ago. If you did, you're crazy to think that. So you have the heads of like the Federal Reserve, the Treasury, the SEC. They're all making comments on it now in public, right? In their interviews and stuff. They're actually studying it. They're at the Federal Reserve. They're talking about doing a CBDC. I mean, Jay Powell was interviewed last year and says that, various different parts of the Federal Reserve are doing their own studies and they actually are coding stuff too. They actually are working on stuff. These are all positive events for Bitcoin that are almost overlooked because of the price action. It's like, get away from the price action for just a second. Forget about the price of Bitcoin. Look at China putting a ban on it. Look at El Salvador adopting it. States in the United States, there's some, senators and stuff are saying we should have this as a legal tender in our state, for tax purposes. So, at the federal level, it wouldn't be obviously. But usually it works in America at the state level, marijuana, et cetera. Right. And then it kind of moves percolates its way up. It's happening way faster, in my opinion, than I think anybody would have guessed.
Oh, totally. Yeah. And again, this is all foundational. Like this foundation leads to a moment where, if governments launch CBDCs, it's a pretty dismal moment to where people go, wait, I really need Bitcoin now. So all roads, in the path that I see, if we Black-Scholes model this out, all roads lead to Bitcoin. I don't really see a scenario where Bitcoin's value prop diminishes in light of what governments are doing across the world. So yeah, there's never been a better time. And in fact, in terms of a return per unit of risk, Bitcoin was extremely risky back in 2013, 2014. And so the returns were corresponded with that level of risk. Bitcoin has been very much de-risked. Like we had a hard fork, a civil war that we survived. There's been no flipping of Bitcoin. Bitcoin volumes are never been higher. Bitcoin has gone through a lot narrative wise, has survived all that. And it's being globally recognized as a Gold 2.0 by institutions. We're in a pretty damn good spot. There are risks ahead, but
what I think a lot of the problem is, Dan? I think it's, I brought him on the show and then I brought Willie Woo on after it was Plan B. So Plan B's stock to flow model, I think they say happiness is managing expectations, your happiness with your level of happiness, right? So if everybody's assuming that we're going to hit $100,000 and then we don't hit $100,000, I think they're disappointed that we didn't 100,000 rather than saying we went from $3,800 to 69,000. That's pretty amazing, right? When you think about that from any asset class. And if you take a step back, and you forget about his model, I think you'd have to admit with all the things we just talked about, there's tremendous progress in the fundamentals of Bitcoin, in the adoption of Bitcoin. The price action got screwed up, but then Willie Woo raised a good point. He says, I don't think stock to flow model was broken. I don't think it didn't work. He's like, I just think he didn't account for, as you said earlier, the NFTs and all these other, because if you look at the overall crypto market, had it all flowed into Bitcoin, right, you would be at a $2 trillion market cap, be over $100,000. He goes, so we actually did get there. We just have a dilution of this particular asset class in this moment in time. And that will not necessarily be the case in 10 or 20 years, right? It'll flow into Bitcoin again, right? But right now people are speculating and they're just making some money.
Yeah, the alts to Bitcoin ebb and flow all the time. It's, I think there's a lot of different narratives now versus like, hey, we're another type of Bitcoin, right? Like Litecoin is just like, oh, we're another type of Bitcoin versus NFTs, which are very distinctly different.
Yes.
They're not really even
all the same thing in speculation, though.
Yeah, it's all forms of speculation, as with all traditional assets as well. But yeah, ultimately, like I think long term, you want to, Bitcoin is that savings account. So the way I phrase it to folks is I don't make them feel bad or anything for buying NFTs. Go ahead and do whatever you like, but take it from old Dan Bitcoin. I'm going to want to roll some of those gains into Bitcoin and hodl that because you don't want to hodl. What I look at in terms of my investment portfolio.
You don't want to hodl a JPEG of a monkey.
Maybe you do. Maybe it really means something.
We could be wrong.
We could be wrong, but it's not fungible, which means it's going to be hard to find a buyer for that someday if the demand for that asset drops versus like Bitcoin or another type of crypto asset that are much more liquid. There's a lot more counterparties to get in and out of that. And so in moments where the market becomes more bearish, those could become very illiquid. But people have to learn on their own. So, people can go try out whatever they like. And look, if you really like the JPEG, awesome, cool, whatever.
Yeah.
People buy modern art and people buy cars and stuff in the real world while they own Bitcoin. So, each individual has their own sort of preference of what they want to spend their money on.
By the way, just one more thing on the adoption thing. I love when she said this, and I think I've heard you talk about this in the past too. Cathie Wood, I forget the percentage, but she said if you take, I think it was like 5 or 10% of the cash on the S&P balance sheets and push that into Bitcoin, the price of Bitcoin goes to like, I don't know, like $500,000 per Bitcoin. So like it's okay. Yeah, I got you. So basically, what do you think of that? Like, because this is one thing I think a lot of people don't realize. Like over time, the majority of the cash, by the way, is held by high growth technology companies, right? Who are more inclined to possibly do that. We're starting to see some of them do it. I think that's a possibility. For the adoption rate to kind of accelerate over the next 5 or 10 years. We'll probably increasingly see that.
Oh, totally. I mean, corporate cash balance sheets are massive. Just if a little bit of that goes into Bitcoin, the price goes to the moon. Same with anything else. Like what if a central bank starts to buy Bitcoin? Like if a central bank buys Bitcoin, or what happens if like there's a really huge purchase by a sovereign wealth fund? Bitcoin institutional adoption has just started. So we're starting to see that touch on a lot of different things across the world. I think that, right now it's more of the pioneer hedge funds or the pioneer VCs that are buying into Bitcoin versus like the whole world, just considering it like a gold or cash type of asset. So we're very early in that adoption.
For sure. Dan, I want to be respectful of your time. I want to thank you for coming on today, really for sharing your background, which I think was really fascinating, and how that relates to what you're doing at Kraken and the adoption and the growth of Kraken. But if you could tell everybody where they can find you, because I know you have the Dan Report, tell everybody about where they can find you.
Yeah, well, appreciate you having me on, Jay. Had a blast. I don't normally talk about my background that much, but I like doing that because this was a little bit different than usual. So that was fun. You can find me at danheld.com. danheld.com has the collection of my blogs. You can also subscribe to my newsletter at theheldreport.com. Or if you like more shorter form stuff, follow me on Twitter, Dan Held. So they're all versions of the Dan Held name. But definitely check me out on those. If you liked what I said here, if you want to learn more. And again, Jay, appreciate you having me.
Dan, thanks for coming on. And I should probably take your advice and be a little bit more about growth hacking here. So guys, if you like this, like, comment, and subscribe. I never really say that, but thanks for coming on, Dan.
Cheers.